As the stock market continues to crash, we've seen cryptocurrencies take an even bigger hit, with even some of the most popular cryptos like Bitcoin and Ethereum crashing by around 70% and 80% respectively. And as such, I've been getting questions in a lot of my videos in the comments section asking me how I feel about cryptocurrencies right now. Why are they crashing? Am I using this as an opportunity to buy cryptocurrencies? How do I feel about it? All of that type of stuff. So in today's video, I'm going to try to address all of those questions, give my opinion on everything. If you want to jump to a specific part of the video, hear my opinion on specific issues, I'll leave timestamps for you down below. But we've got quite a few things to cover. It's going to be hopefully a fun one. I hope you guys enjoy it, but let's go ahead and jump into it. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Let's go ahead and start by talking about the cryptocurrency market crashing. We'll take a look at what's going on here and we'll talk about why it's happening, and we'll just kind of go from there. Okay, so just taking a look at a few different charts here. Let's start things off with that, and we can see just how much devastation here has really entered the crypto market in recent months. I mean, take a look at this chart here that shows the total combined market cap for all cryptocurrencies in general. And you can see that at one point they were worth about $3 trillion. That is a lot. But today they have crashed by around 70%, all the way down to less than 1 trillion. And when looking at some of the most popular coins, you of course see the same thing. Even Bitcoin and Ethereum, which are widely considered to be the safest coins to invest in, they've fallen by gigantic amounts too. As of today, Bitcoin is currently down around 70% after falling from a high of close to $70,000 just about 7 months ago. And now it's fallen all the way down to as little as $20,000 today for a Bitcoin. That's pretty crazy. Now, by the way, the reason why the total market itself is down about the same percentage as Bitcoin is because Bitcoin simply makes up the vast majority of the market at over 40% of the crypto market. As for Ethereum, they're the next biggest player with the second most market share, but they only account for less than 15%. So that just shows you how large and what a big role Bitcoin still plays in the crypto market, even after all this time as, being like the original crypto. Anyway, the price for Ethereum is also down a massive amount right now at close to 80% from its highs. And of course, some of the riskiest coins that don't actually have any like unique underlying technologies, like I would say probably, Dogecoin, shibcoin, things like that, they're down even more. I mean, Doge, they have already crashed by over 90% from its highs. That's pretty crazy. And to finish up with these charts, though, I'll just show you a couple more popular coins that actually do have some really nice underlying technologies, just to show you that cryptos can actually do some interesting things. But even these coins have crashed by giant amounts too. But I'll give you some examples here. Avalanche, they're known for already using proof of stake, which is something that Ethereum is still trying to transition to. But since Avalanche already uses it, they benefit from faster speeds than Ethereum while also charging lower fees. On top of that, the Avalanche network is known for being especially useful in gaming, and thus many games are actually built on the Avalanche platform, helping it differentiate itself even more in an overly crowded crypto market. And those benefits initially sent the price of the Avalanche coin skyrocketing from just a couple dollars a year ago all the way up to about 150. But it's now crashed by over 90%, all the way down to just around $16. Now, Solana, that's another popular coin, and they gain notoriety, especially in the NFT world. I'm sure you guys have heard about NFTs. I think they're ridiculous, but man, there are NFTs that are worth like millions of dollars. It's crazy. Anyway, they got famous in the NFT world because they use a proof of history method, and it involves very attractive fees and very good speeds. And with NFTs in particular, they can sometimes cost hundreds of dollars to mint NFTs on other platforms, but on Solana, they've actually already minted well over 5 million NFTs at an average price of only less than $2 each. So that's a huge advantage. And as a result, Solana has already become the second largest platform for NFTs, only after Ethereum. Now, just like Avalanche, this technological advantage initially sent the price of Solana skyrocketing to around $260, but since then, it too has come crashing back down by around 90% to just the $30 range. So you can clearly see just how many cryptocurrencies are getting absolutely destroyed right now. And we know that in the past, crashes like this have actually been buying, pretty good buying opportunities for anyone holding long term. However, that may or may not be the case this time. But before we even get into that, we have to first talk about why the market is even crashing in the first place, and then I'll give my opinion on it and let you know what I'm doing myself and how I'm navigating these current market conditions. Okay, so I would really say that there are two primary reasons why cryptos have been crashing by so much lately. And I would say reason number one, I'm going to say that it's clearly having to do with the macro economy. Now, initially, it was believed that cryptos may be a good hedge against inflation because the theory was that if the value of the dollar went down, then people may turn to certain cryptocurrencies like Bitcoin, for example, that have a set limit of how much can ever be created, and thus it would be a better store of value since it wouldn't be vulnerable to money printing and thus, resulting in inflation that comes from that and all those kinds of things. Kind of similar to how gold works. However, that theory has been falling apart in recent months as inflation continues to soar, and rather than investors turning to cryptocurrencies for a safe haven, they've actually been selling out of them by even larger amounts than even the stock market because they consider cryptos to be even riskier assets to own during a weak macro economy. In fact, many experts are now predicting that the economy is heading towards a recession, which is leading to investors selling out of high risk assets. That's something that always happens during a recession time. You're going to sell out of the riskier assets. And you take, for example, here the tech heavy NASDAQ. We know that the NASDAQ is, of course, home to higher risk tech stocks, especially. And right now, that index has already crashed by close to 35%. And of course, I already showed you earlier how cryptocurrencies are down by even more at closer to 70%, which, in my opinion, it makes sense. Again, anytime that you have an economy being destroyed, you're going to have people withdrawing their funds from riskier assets as they simply try to get by their daily lives rather than, spending money on risky investments. You're just not going to be doing that during a weak macro economy when people are losing their jobs and you've got all kinds of issues going on. And that, by the way, leads me to reason number two, which is that I think there are some very real systemic issues plaguing the crypto market right now that involves a lack of liquidity. Take, for example, the cryptocurrency lender Celsius, who recently announced that it was freezing all cryptocurrency withdrawals. That's a very extreme measure that you only take when you're dealing with severe liquidity or solvency issues. But it didn't even stop there. Binance, who is actually the largest crypto exchange in the entire world, they also announced that they would be freezing some Bitcoin withdrawals as well. Now, in their defense of Binance, they did say that it was due to a stuck transaction that caused a backup in the network, but the timing of it was still a little suspect, and it was enough to surprise investors and scare them into selling out even more of their cryptocurrencies in fear that they may not be able to withdraw them or cash them in the future if things keep spiraling out of control. So what are we to make of all this? Well, I can tell you right now that this is clearly a seller's market in cryptocurrencies. I don't know when the economy itself is going to recover, but my guess is that's what's needed in order to also stabilize the crypto market and set it up for another bull run. And I know what you're saying, at least a lot of you are probably saying this, another bull run, you must be crazy. Cryptos are clearly going to zero. And you might be right, but I don't think that's what's going to happen. I don't think that this is how the cryptocurrency story ends. My gut tells me that over the very long term, cryptocurrencies will face their biggest obstacle at the hands of the government. I think that if cryptocurrencies ever get destroyed, completely wiped out, it's going to be at the hands of the government. And at the very least, I do think that there is going to be heavy government regulation in the distant future. But in the meantime, I don't think that cryptocurrencies are going to get completely destroyed, completely wiped out at the hands of regular traders selling out of cryptocurrencies just because of the fear of the economy. I don't think that's how the cryptocurrency story ends. I think once things do stabilize, I think there will be potential for another bull run in the cryptocurrency market. Granted, that is heavy speculation, but what am I to do? Cryptocurrencies are pretty much speculation. It's very hard to treat cryptocurrencies, at least in my opinion, as an actual investment. And that's why I feel like the average person should probably not be spending money on cryptocurrencies because, for one, the average person doesn't even understand how cryptocurrencies work. And I even still struggle with them myself. And I would like to think that I'm more knowledgeable on them than the average person, but even I still struggle with them. And two, cryptocurrencies are insanely volatile, very risky, and we've seen just how big of moves they can make to the upside, but also to the downside. And the average person just can't handle that type of volatility and that type of risk. So I really think that the average person should not be spending money on cryptocurrencies. And I myself don't even invest in cryptocurrencies. I think that they are a speculative gamble, and that's how I treat them. I do not invest my money in cryptocurrencies. I only put money into cryptos that I'm actually comfortable losing. And that brings me to my next point here, which is I'm going to have to be clear with you guys. I'm going to have to be transparent with you guys and let you know that I have only a very, very tiny amount of cryptocurrencies. And I'm a little embarrassed to say it because if you are someone who is very bullish on cryptocurrencies, you're going to think I'm crazy for owning such a tiny amount. And you'll probably just want to turn off this video because who am I to talk about cryptocurrencies when I own such a very, very tiny amount? But I have to be transparent with you guys and let you know what I actually own myself. I only own a couple $100s of cryptocurrencies. That's it. Very small amount. And in relation to my portfolio, like overall assets portfolio, it is absolutely nothing. And in terms of how much my budget is for cryptocurrencies, I'm only willing to spend about $100 a year on cryptocurrencies. That's literally it. So I'm really nobody in the crypto world. I'm probably someone that you should not be listening to about cryptocurrencies, if I'm being completely honest. But people ask me for my opinion on it, so I have to make the videos you guys want. So I have to give my opinion on it, even though I really own almost nothing of cryptocurrencies. But I own a couple $100s of cryptocurrencies. I do like to spend about $100, maybe $200 kind of max per year on cryptocurrencies. And that's just where I feel comfortable at that amount of money, basically making a speculative gamble because I can afford to lose it and I'm not going to lose sleep over it. I'll be totally fine. I can spend a couple $100s a year and not be, losing sleep over that amount of money. Now, you might ask me, well, why do you even own any cryptocurrencies in the first place if you think it's such a speculative gamble? Well, because sometimes it can be a little fun to make a bet on something. And I actually think that cryptocurrencies have a lot of inherent value. I think they are actually very disruptive to the financial sector. When you actually look at the different things that cryptocurrencies can do, they are actually very disruptive. The reason why I still think of them as so speculative and such a gamble is because there are so many of them. They're not really backed by anything. And at the end of the day, I still think that governments are going to intervene at some point because they do pose a major threat to large governments and federal oversight and things like that. So from that standpoint, I think they are still very risky and they're extremely volatile. And I just don't like to own things that are so insanely volatile. But at a small amount, I don't mind a small amount, and it's kind of fun for me in a way. And sometimes we've seen that cryptocurrencies can absolutely skyrocket, even just based on hype. And sometimes that's not such a horrible gamble. Sometimes betting on hype can actually pay out a decent amount. Even with a small initial amount of money, you can sometimes still see cryptocurrencies skyrocket by such a large amount that you can actually still make a decent amount of profit on it, especially if you hold it very long term and it really skyrockets by a lot over that time. And also in the short term, and a lot of people love to swing trade cryptocurrencies. There's a lot of different ways you can play them, but I just wanted to be transparent and let you know that I do own just a very, very small amount of them. Now, if you want to know what I am buying, because I do, like I said, I have a budget of spending around $100 to maybe $200 per year on cryptocurrencies that I'm just treating as basically a gamble. If you want to know what I'm buying with my yearly budget this year, because I do have that money to spend this year and I will be spending it during this current market crash in cryptocurrencies. If you want to know what I'm buying, well, I'll go ahead and let you know right now. I am sticking with the two big dogs in Bitcoin and Ethereum because I think that they're the safest plays both for the current market volatility as well as over the long term. And here's why. Bitcoin, I like them because it's the number one largest coin in the market. It's capped at 21 million coins that can ever be created, making it at least a better hedge against inflation than many other coins without such limitation. And really, I like it just because it is the largest, most used coin. It's likely to also be one of the safest because of that. And probably going to be one of the most stable and reliable coins over the long term. In fact, there are already more than 15,000 businesses around the world that accept Bitcoin, including some giants like even Microsoft, Overstock, AT&T, and more. We even have two full-on countries already accepting Bitcoin as legal tender in El Salvador and the Central African Republic. Now, granted, those are very small countries, but if the trend continues, it could be a really good catalyst for Bitcoin's price long term. If you start with a really big foundation, it's going to be easier. People are going to trust it more. And I could see that leading to some stability in Bitcoin over the long term. And speaking about stability, things like that. I mean, when you look at Bitcoin's history, I'm not saying that this proves what will happen in the future, but at least in the past, we've seen Bitcoin's price crash many times before, only to climb back up once again when things stabilize, as you can see on this chart here. So I don't know. I just think if I'm going to bet on something long term, Bitcoin seems like one of the safer options, at least in my opinion. Anyway, when it comes to Ethereum, now that one's a little different. I like them for a couple different reasons, but not only do they already have the second most market share, which that alone makes them, in my opinion, one of the safer options, but they also have very good underlying technologies that set it apart even from Bitcoin with their smart contracts and various other functionalities that continue to attract developers to the platform. This has been the case so much so that Ethereum has even grown to become the number one largest blockchain and coin used for NFTs. Now, granted, Ethereum has been losing market share to a rise in competition like Solana, for example, which we talked about earlier in the video, but not only do they still dominate the market at around 80% market share, but they also have a huge catalyst for the price going back up later this year when they eventually launch version 2.0, which will transform the blockchain from proof of work over to proof of stake, which is the same technology that Solana uses. And thus, Ethereum will eventually be using and offering the same competitive speeds and prices as these other coins that have been stealing market share, but it'll still be the second largest network in the world. So do you want to go with the smaller coins that are newer and riskier, or do you want to go with Ethereum, who's a proven leader and is going to eventually offer the same technological improvements as these other smaller coins? And I just feel that that sets it up for a big catalyst for the price in Ethereum to recover, assuming that things overall start to stabilize. And by the way, I'm not saying that you necessarily shouldn't gamble on some smaller coins for fun, but I would just treat those for fun. I wouldn't really look at those as any kind of real investment. Those can be extremely risky, and especially the ones that don't really have any underlying technological advantages or things like that. So especially like the meme coins and stuff like that, I would really stay away from them in most cases. But sometimes it can be fun to gamble on those, even just based on hype and things like that. But over the longer term, if cryptocurrencies actually become a viable option in terms of money and value, and they really survive government oversight and regulation and stuff like that, I still really think that the big dogs are the ones that are going to have the best chance of surviving, and that's going to be Bitcoin and Ethereum. I think a lot of the smaller coins are going to basically disappear. That's just my prediction. I'm speculating, obviously, but if you want my opinion on it, that's what I think. And really, these kind of market crashes can be good for the crypto market because it can shake out a lot of the weak hands. It can a lot of times eliminate a lot of the really shady, really bad, very risky speculative coins. A lot of the meme coins, it can kind of get rid of those. And then people will focus in on the more disruptive coins that are larger, safer, and actually have some technological advantages over other financial systems, and they are actually disruptive, and there is maybe some reason to invest in them and things like that. So anyway, these are just my predictions. These are my opinions. I hope you enjoyed the video. I hope I made some sense. I hope I didn't ramble on too much, but I get questions asked sometimes that are difficult to answer, and I do my best to give you my opinion on it and let you know what I'm doing. Of course, you're welcome to disagree with me. You might be a huge crypto bull, and you might think that everything I said is crazy and you disagree with it, and you might also be a really big crypto bear and you might still disagree with me because I actually do own a little bit of cryptocurrency. So I'm sure I'll get some maybe not too nice comments from both sides, but hopefully I made some sense to everybody kind of in the middle, where we can see that cryptocurrencies can be disruptive, but they also have a lot of risk and you just have to be a little cautious with them. But anyway, those are my opinions. Love to hear what you guys have to say and what you think down below in the comment section. So let me know, do you own any cryptocurrencies? And if you do, I wish you the absolute best. I wish you the absolute best with any investment in crypto that you have. And if you're staying away from cryptos, I wish you the best with that decision and with whatever it is you are invested in. But either way, I hope you're all doing well, and I will catch you in the next video. Take care. Bye-bye.